Hello and welcome. This is the Hot Corner Insider Live Strategy Session. Today is December 27th, 2023. I'm your host, as always, Steve Strazza, Director of Research at All Star Charts. Merry Christmas, Happy Hanukkah, Happy Holidays, everybody. And since I won't talk to you in another 7 days, or for another 7 days, Happy New Year. Thank you, everybody, as always, for being patient. We're going to do better in the future about starting on time at 1 o'clock each day. A lot of moving parts this week, slow week for everybody, but the markets are not slow. This is a fast market. I want to talk about whipsaw hunting season, and then we'll dive into some of our favorite stocks from the Hot Corner list. But first, nothing we discuss here today constitutes any sort of solicitation to buy or sell any security. This is all solely for informational purposes and not to be construed as investment advice. For more on our disclaimer, go to allstarcharts.com/terms. So, guys, I will catch up on the chat throughout the show. I love it that you all just want to talk to me so bad. Honestly, you make these shows for me. You know, when the chat gets active and we can go back and forth and I can answer some questions. I love doing the Q&A at the end. It really, for me, makes these shows so much more fun, right? Because we're out here talking about a lot of these charts over and over and over again each day and each week. So to get to interact a little bit, talk about what you guys want to talk about, really, really makes all the difference for me. So thank you. Thank you, everybody, all year. You know, Stock Market TV, just kind of getting off the ground. We launched in Q1, really early Q2 of this year. And it's been a fun ride already. And just thank you all for coming, and joining us on this journey. We are planning to do some really big things in the future. So I am so excited. We get asked a lot, how did you guys get it so right this year? This was really the chart. I was talking to JC this morning. I said, but those reversal patterns were just so good. The reason they looked the way they did, probably because of this chart, right? 2022, just forget the whole left side of this screen here, right? Let's just go straight to 2022. Look at the dollar melt up off of the COVID or whatever this was, 21 lows, right? Straight line higher. It was parabolic for sure. Blow off top. We saw all the signs. We were all over this in September or October of last year. Dollar came down hard in late 2022 into Q1 of this year. Then what did we do? We based here, we chopped around, right? And we came off, this was July. This low here was July. We ripped into October and everybody got really worried. Remember just 2 months ago? We were in a very different place than we are today because the dollar was ripping from its July lows to its October highs, right? And now we're all talking about the breadth thrust and the broadening participation and everything's working and look at these short squeezes, right? Risk appetite's blowing up. Credit spreads are making new lows. Well, what's going on in that period? Look at the dollar coming off here. This last leg lower, okay? I want to give everybody a line in the sand. That's why I'm zooming way out on this chart and the next one. We're about to talk about interest rates. I want to give everybody an intermarket line in the sand for 2024. If the dollar is below these prior cycle highs, now pay attention to the other side of the chart here. Prior cycle highs come in just north of 100 and change. It's really like 103, 102.50, 103.50, right? We're below there. And sure, I want to see confirmation. I want to see them take out these range lows here, or I want to see Dixie take out these range lows. But as long as we're below 103.50, the dollar's not a headwind. Right? This is what a dollar headwind looks like. Right? This wild uptrend into the 2022 highs. That is when the dollar is a headwind. If we're below 103.50, maybe we're sideways, probably we're lower, right? Imagine a world where the dollar heads back to the lower bounds of this old range, right? We're talking about dollar or Dixie in the 80s. Risk assets are going to go off. Okay, so this is your playbook. As long as we're below 103.50, great. What happens below there, I don't care too much about. If we surge higher, correct this damage, get back above 103.50, we're going to be saying very different things than we're saying today. The US 10-year yield, I think 4% is the level there. I don't anticipate that interest rates and dollars will move in different directions. I very much believe that this new positive correlation is here to stay. In other words, lower dollars, lower rates, higher bond prices, higher prices for risk assets. All right, we talk about JC's done a great job making it overwhelmingly clear that stocks and bonds are now positively correlated. In other words, what do we talk about every Fed meeting? We want the Fed to pivot. We want interest rates to come down. What happens when the market gets any, sniff or inkling of an idea that interest rates might come down? They bid up stocks. Also, when interest rates come down, by definition, bond prices go up. So we think stocks and bonds will continue to be positively correlated. We think dollars will continue to move with interest rates. And the more that those two assets move lower, interest rates are not an asset. I guess if bond prices continue to move higher and dollars continue to move lower, we think we will remain in an environment where we want to be aggressively buying stocks. Does that mean you wake up every morning and aggressively buy stocks? No, not at all. And we're going to get that. We're going to get to that in just a minute. Over longer time frames, we're very comfortable we're in a bull market. However, in Q1 of this year, when we think about the gains that we have experienced off of the October lows, I think a corrective wave or a corrective period for risk assets is a foregone conclusion at this point. It's coming. When is the question, right? And don't get spooked out of stocks like a lot of people did from this summer into October, right? Those will be, I think, incredible buying opportunities, but we want to be careful about how we pick our spots and how we make our entries. And every group is different right now. So we're going to talk more about it. For now, the point here is 4% in the 10s. We're below there, green light. These prior cycle highs, 102, 103.50 in DXY. Now, so we talk about this move lower in the dollar right here, right? Since October. What have small caps done? I like small caps. I think that they are an excellent representation of what the average stock or what most stocks are doing. This is the leg up in small caps off of the October lows. Lower dollars helped, of course. Lower interest rates helped, of course. That's why I started with those charts. If we're above 200, that's it. This is my line in the sand for the stock market. In other words, what am I saying? I want to know that the trend reversal, right? So we went up off the COVID lows, sideways, this was a top, down off the 2021 highs into 2022, then sideways again, another transitionary period. This is now a monster base. Talk about accumulation. They don't make them this pretty in the textbooks. If we're above 200, the reversal is in for most stocks. For the weakest stock market index in the United States, small caps. If this trend reversal is complete, then it tells us that the path of least resistance is now higher, right? We are now in an uptrending market for most stocks. So I think it's as simple as that. As long as this pattern completion does not come undone, I think that comes undone at this blue diagonal line or this gray horizontal line, right? I think then you could say, okay, we're back in the range here, more work to do. As long as this remains intact and it tells us this trend reversal is in, we're going higher now. Most stocks are going higher now. Green light, right? So there are three key levels: 103 in dollars, 4% in yields, 200 in small caps. S&P mid caps, getting it done. This is a small cap 600, a little bit smaller, higher quality universe than the Russell 2000, right? Unlike the Russell, the S&P has rules. You have to be of certain quality to be included in this index. That's why it usually looks a little bit better than IWM. The bases are in, right? These bases are completed. New uptrends. New uptrends. Is that the theme for 2024 or what? Okay. Now, timing this stuff is not easy. So I tweeted a chart weeks ago about the historic overbought reading in terms of the percentage of components that were overbought in the S&P 500. We almost hit 50%. That means that almost half of the stocks were overbought with an RSI above 70 on a single day in the S&P 500. Almost half of them. I think it hit 47%. And then the market went down. I don't know. I think it was like last Thursday. We had this intraday reversal and everybody lost their mind. So I said, you know, this period with these breath thrusts really reminds me of May, June of 2020, off of those COVID lows. We had some of the most historic breath thrusts that you will ever see. So I went back and I looked, and here's what I found. On June 8th of 2020, 43% of the S&P index components were overbought. 3 days later, literally 3 days later, after that beautiful bullish breath thrust, which tipped us off that the new bull market was absolutely confirmed, we had a 5.9% sell-off. The S&P was down almost 6% in a single day, right after one of the most bullish breath thrusts we've ever seen. The market quickly found its footing and then rallied 60% over the next year and a half. Right? Shown right here. What is my point? The market doesn't move in a straight line, and you don't want it to move in a straight line. If we have some huge give back, right, or huge sell-off right now, it doesn't undo the breath thrust that we saw. It doesn't undo any of the progress, really, that was made, or any of these bullish developments. A breath thrust, once it registers, it's there. It doesn't come undone. It's not a chart pattern, right? It tells you about the aggressiveness of buyers in a market. So down 6%, then the market ripped. This was back in June of 2020. If we have some sort of significant sell-off over the very near term, the point I'm trying to make is that's a gift. If you feel like you're underexposed to risk assets, or you missed buying, you know, fill in the blanks with your favorite name, your favorite individual stock, a nice little sell-off here would be great. So dips are for buying in this market. Don't let some sort of corrective wave or little, period of corrective action scare you out. That's going to be a buying opportunity. And I hope we get one soon. In fact, this steady grind higher, I don't love. I've missed some things. I would love to see some throwbacks. I'm still kicking myself for not buying the very extended trend when Mara was breaking out. Talking about that Bitcoin miner, Mara, right? We came out with a bullish idea on it, I don't know, last week or the week before. It's up 50% since. It was extended when we put it out. It's up 50% since. Still extended. More extended. I would love some volatility, some selling pressure. Give me a chance to catch what I missed. Now, with that said, how about some context? Charts are extended, for sure. Here's ARK. Why am I using this? Most speculative growth stocks in the market, and we have a full index of them. Thank you, Cathie Wood. I think this is fantastic. I love what she's done. I'm a huge fan. I think everyone should think more like Cathie Wood. If you're a long-term investor, boy, she gets a lot of shit for how awesome she is. Look at this base and ARK, just now completing. We are about 30% above the 200-day moving average, which is shown in gray with the green shade beneath it. That's a lot. Super extended. The most extended of any index that we track, probably. We actually include this as an industry group, so I don't know about the thematics. But in our industry group universe, the most extended. Well, how about at the peak of the last cycle? We were about 70% higher than the 200-day moving average. When things were really getting wild during the last bull market. So we could sit here at 30% and say, wow, that's crazy. It's probably going to get a lot crazier. So get used to buying extended stocks. For 2024, get comfortable buying stocks that look too good or too high. Because guess what? One thing that we know for sure is that markets trend. And when these uptrends get going, especially in these high beta, these juicy names, they really go. Do we see 70% extension again? Was 2020, 2021 kind of crazy? Was kind of like an anomaly? A lot of people would argue yes. I don't know. I don't know. Dot-com bubble was crazier 20 years ago. Why can't that happen again? Again, we're just training our brains to think in a certain way, right? We're in a new market. We're in a new environment. This is a very clear and obvious bull market at this point. Assets are going to get really overbought, especially the riskiest ones. They're going to look like they're going absolutely parabolic, and then they're going to go more parabolic. You're going to look at some of these altcoins and constantly feel like, I can't buy this here. And then you're going to watch it double. That is now the environment that we're in. Let's train our brains, right, and get used to operating in this sort of, upward volatility environment. Let's talk about some things that are not extended that I think are very actionable right now that I feel very comfortable buying. Because, again, back to ARK. It's whipsaw hunting season. We talk about the low liquidity, low volume, right? Just low participation this week, last week. A lot of people are on vacation, right? What happens during this period is that the trends that are already in place tend to get exacerbated in whatever direction they're currently going. And right now, for most risk assets, it's up, right? So you're going to see them kind of melt up, probably, this week. Then come January, the real money comes back. They get back to their desk, right? They get back from the Bahamas or wherever they were for their year-end vacation, and they reverse those trends. They fade the hell out of them. So be careful. I'm not buying extended things here. I'm happy to miss Mara, right? I'm happy to miss a lot of stuff. I've missed plenty of stuff. I'm going to miss so much more stuff next year. I was just talking to Alfonso about it. It sucks. When you're watching a chart, you're aware of what's going on, and then you just miss it, and it runs away from you. Get used to that feeling. If you don't feel that way in a bull market, you're probably doing something. The point is, come January, so a couple days from now, the real money is going to come back to work, and some of these trends that have really gotten silly in one direction, and again, that direction has been up, they're probably going to get smacked. That's something that I'm being very cautious of when I put on new trades this week, next week, probably the next, the week after that. Some of these ARKy names, for some of these really growthy names, for some of these short squeezy names, I'm in something right now I got in yesterday. I'm playing this squeeze for this week. I will be out in a couple days. Not going to hold it into January. Not saying it can't keep working. It's just my odds of winning are decreased, right? And I think this week is for the squeezes, not next week. So just keep that in mind, okay? And now there are other things that we can deploy capital to right now that are not extended. Gold's been sideways for 3 years. Done absolutely nothing. If gold can't break out in this tape, I don't think it ever breaks out. Kathy's been selling her coin. Good. Know why? I've been selling mine. Dennis. I sold 1/6 of my Coinbase last week. It gets too big. You got to. ARK has the same problem. Coinbase contributed, I did the math last week. Coinbase contributed about a quarter of the gains to the ARK flagship fund this year. It became by far the largest holding, and it was by far the top performer. It was up like 400%. It becomes too big of a position in their index, in their fund, right? So of course they're selling coin. Of course. They're not trying to run some sort of momentum fund where the largest stocks are weighted like something in the NASDAQ 100. They're trying to keep a generally equal weight structure there, right, in the ARK funds. Coinbase is up 4x while everything else has kind of had a decent year. Yeah, they got to sell some Coinbase, right? I'm doing the same thing in my portfolio. Don't overthink this. Don't ever overthink it, when any insider or institution is selling stock. There are a million reasons for that. But guess what? The reason why we do the hot corner is because there's only one reason to buy a stock. A million reasons to sell. Your daughter's having a wedding. Need some money for it. Sell the stock. Whatever. You got divorced. Ask Jeff Bezos why he sold his stock. Right? A million reasons to sell stock. We don't want to overthink it. Kathy Wood, why are you selling Coinbase? I have to sell Coinbase. It's become too large of a weighting in our fund, of course. Ask Kathy Wood when she's buying Coinbase, why are you buying it? To make money. We think the stock is going higher. That's why in the hot corner, we pay a lot of attention to buys, very little attention to sells. We can waste all day checking the Form 4 S's. Those are the Form 4 sales. But I don't know what's going on in all these sellers' lives. I don't know why exactly they're selling their shares. And a lot of times it has nothing to do with the prospect for the stock or what they think of the stock, right? Just want to get that out of the way. If gold doesn't break out in this tape, I don't know if it ever breaks out. Look at this chart of real yields. Okay, so we had a little bit of a divergence here in this first green and red arrow. Okay, past that, financial crisis lows, big uptrend for gold as real yields are falling. And I'm going to talk about this in a backwards way, right? This chart is inverted. So as real yields are falling here, gold is ripping. Real yields peak, roll over, have an extended period of sideways. Gold peaks, rolls over, has an extended consolidation. Real yields start falling again. Gold has a nice run, right? Through the pandemic into 2021. Then gold is sideways, consolidating gains, and real yields are ripping higher. Absolutely ripping. How come gold's not falling? This divergence really stands out. I think this chart tells us everything we need to know. That resilience, that's an asset that wants to break out. The inner market is suggesting lower gold prices. Gold is saying, no, we're high and tight right here at our breakout level. I think now that real yields are cooperating, moving lower again, interest rates are falling, right? Everything is falling into place for gold. Lower dollars. Metals and mining stocks, it's all I want to talk about these days. These stocks look so good. They look so ready, right? So real yields, that pressure's coming off from an intermarket standpoint. Lower real yields, I think you get this breakout in gold like right now. Now, how do I get confirmation? Other precious metals assets, gold miners, silver, platinum. I want to know that buyers are back in control of these trends. How do I know that? I have anchored a volume weighted average price from their cycle peaks. For gold miners and silver, this is 2020. This is like the Wall Street Bets silver move back in 2020. Remember that? That was fun. Platinum peaked later in 21, dropped VWAPs from all of their cycle peaks. We're right there. These levels get reclaimed. Then I'm confident buyers are back in control of these markets, and that is so supportive of a breakout in a chart like this. This is gold futures. And guess what? The miners look great. Let me check notes here. Oh, I think they're so ready. Yep. I got a couple positions on the miners. I think this is time for precious metals. We want to be ready, but we do want to wait for this confirmation. Here's what I'm using for confirmation. It's not just as simple as gold clearing this range. I don't want to deal with another failed breakout. It's not just precious metals. In fact, it's more industrial metals. All of materials are doing well. It's not just large cap materials. Frankly, there isn't much in the world of large cap materials. Here's small cap materials breaking out to new all-time highs. We talked about this last week. Update. Here's steel. We got the resolution of this range. Steel's going higher, right? This is industrial metal. Metals and mining. Talk about a giant base. Huge base. And we keep climbing up the right-hand side of this chart structure. This thing's going back to 100. That's XME. We have fun with our inner market. This is a blast from the past. This is Aussie yen. I was joking this morning. What happened to you, yen? You used to give us such great information. Maybe we move back to a place where the yen is worth something. From an informational standpoint, again, it's been pretty crap the past few years. Bank of Japan, what have you done? My data. But look at the Aussie yen here, right? Lower as metals and mining stocks are moving lower. A little bottom here at the COVID lows, higher, sideways, higher together, sideways. Big basis, big basis. If you're wondering, do metals and mining finally complete this base and it's go time? Look at the Aussie yen. Look at the Aussie yen. This is what we call a commodity currency pair. Australia, a lot of metals there. A lot of metals. So just quick cheat code. CAD, Canadian dollar, CAD. It's going to tell you a lot about energy, the energy market. AUD, AUD, Australian dollar. It's going to tell you a lot about the metals market. These are our favorite commodity currencies, and they work really well. So we're watching this intermarket relationship. For now, it looks pretty damn good. Let's talk about some of our favorite setups. Let's hit the chat real quick first. Let's take it back. Whipsaw hunting season. For me, it's like short squeeze hunting season this week, and then whipsaw hunting season next week. Scoop and score an Apple. Listen, I'm a big Apple guy. I have a Steve Jobs tattoo on my arm. I just don't love Apple here. I don't love Apple here. 30 times earnings. I remember when this stock was trading at 10 times earnings. Revenues are not growing. I get it. They're a monster. The biggest moat in the world. I don't know if Apple will ever go away at this point or ever be dethroned. I think they'll be bigger than Microsoft for most of the rest of our lives. However, buying Apple right now, right here today, it's just not my favorite. So no, I'm not looking for a scoop and score on Apple. It's just not the pond that I'm fishing in right now. Apple's defensive. It's quality. I don't think that's where we want to be looking, to be frank. Bitcoin, yeah, go for it. Listen, I think it's time in most asset classes, though, to move on out on the risk spectrum. In other words, if you are a crypto investor, which I am, big one, buying Bitcoin is like buying Johnson & Johnson. You're buying the safest one. But for some people, and if you're long-term enough and you're going to, ride it through bears and bulls, great. But if you're just trying to trade a bull market, go for the juice. Go for the highest beta stuff. Go trade these altcoins. They look great. Right? So in all asset classes, we want to be asking ourselves that. Am I in the offense or am I in the defense? Bitcoin to me is kind of defensive in terms of crypto. Go get a Solana, an Avalanche, Cardano. A lot of these things are working more and more, breaking out every day. Matic today, the Polygon, MATIC. Go check out that one. Optimism, OP. Lots going on there. A lot of movement. IWM trade. Is it oversubscribed? Probably at this point. I'm not buying IWM here. I think there's a real chance of a failed breakout of that base, right? Like we talked about, top of the call. IWM falls back below 200. We could correct. We correct for a month, 2 months, 3 months. Something like we saw from July to October of this year, right? Watch that base in IWM. I don't think it's a foregone conclusion that base remains in place right now. I think it could be a false start, fall back into the range, and then we get some sort of real breakout later in Q1. We'll see, though. But no, that's not. I wouldn't be looking to trade the index level either in a bull market, though. Mary loves VWAP. I know you do. Look how they massacred my currency. Palladium. Palladium looks great. We've been talking a lot of talk about Palladium internally these days. You're getting some sort of a whipsaw high over there right now. We don't really consider it a precious metal, though. I like platinum, too. Really nice move from platinum today. Yeah, that's for real about the tattoo. Signature nosy comments from Rachel in the chat. Love you, Rachel. Merry Christmas. We're gonna get to Berkshire, Josh. Yeah, SoFi is good with me. It's not the cleanest base. Who's asking? It's not the cleanest base, Daniel, but SoFi's in. That's the right kind of name, right? That's the way you want to be thinking. Absolutely. SoFi green light. That could be the new name of a show. Straza Unplugged. Wasn't there? We do a lot of like MTV themed things at Stock Market TVs. A lot of people are probably too young to notice. But oh, was it Giancarlo? It was VH1 Unplugged, right? It was VH1 Unplugged.
Yeah, that's correct.
That was a good one back in the day.
Well, MTV Unplugged would do the concert series, you know?
Yes.
Yeah.
Nirvana.
MTV, yep. And Eric Clapton, yep.
Wow. Yeah, okay. Straz Unplugged. All right. Put it on the idea board. Solana tells you risk on 100%. All these altcoins. Oh, yeah. The Bitcoin getting, it's not that extended. Bitcoin is not extended like Coinbase or Mara or some of these short squeeze stocks that are just kind of like, oh, I can't enter that here. Bitcoin has been sideways since what? First week of December? Just tight coil. So no, I don't think Bitcoin is in that high risk group, right? Of some big profit taking. I wouldn't group Bitcoin in there, actually. Some of these altcoins, Solana, yeah, I would group Solana in there. I think Solana back below 100 give you a much better risk reward than wherever it was the other day at like 120. That could happen in a day, these cryptos. Chewy for the holidays, I'm a big fan of Chewy. If it's below those prior cycle lows, I think it's about 22. We love Chewy. We just put out an options trade on Chewy. Go check out the blog. We convinced Sean. JC and I both like that one a lot. I missed it for now. I would love to buy some weakness here because I am a big Chewy customer. Breaking out below volume, yeah, just get used to that. Also, we don't pay too much attention to volume. Volume used to give us great information, but with the evolution of financial markets and dark pools and derivatives markets, volume's not what it used to be. Sorry. So we don't even put volume on our charts, but yeah, expect low volume breakouts in this tape. And here's the other thing. I think one of the biggest mistakes that a lot of technicians make is, oh, there was no volume on this breakout, it's going to fail. No, I don't like that. Don't think that way. I see low volume breakouts stick all the time. Yeah, so I think that's a mistake. MTV owned VH1. Yeah, they own them both now, and Sherry Redstone is up to something. So it's now National Amusements, which used to be CBS, now owns both VH1 and MTV, and that is further owned by Paramount. The whole streaming and cable industry is just like one person owns this one, that owns this one. There's a family here. It's such a mess. Like, what a shit show. So I pretty much just stay away from all of those stocks. But yeah, MTV, VH1, same family. Old school 80s. Awesome, guys. Yeah, we convinced Sean. Back to the charts. Freeport McMoran. Listen, I'm already in this one. Got in this on FOMC meeting day. Thought it would be more of a tactical trade, but I'm actually still in it because it's just slowly grinding higher. I keep raising my stop. Hopefully I'll be out today, tomorrow. I want this position off. And then I'm going to put on a longer term position once we get this breakout above 45. We've been waiting for this consolidation to resolve in Freeport for years now. Coming off such a just, ridiculous uptrend off of the 2020 lows, this is just a beautiful continuation pattern. You could draw this, a couple different arcs here. I think eventually if this resolves higher in the direction of the underlying trend. In other words, I don't think that this is a head and shoulders pattern. I think this is going to be a failed top or a continuation pattern, and we head back to 70 soon. Use 45 as that level. You know what? It's Christmas time. You could jump this one right here. If you were to draw a diagonal line on this little trend right here, it looks like it's going. I think you could jump it and get long right now. Alamos Gold, AGI, 14 was our previous price target. We're there. This is the leader when it comes to gold miners. I think we want to be fishing in the gold miner pond, in any metals pond, right? AGI is as good of a name as any. To kind of put your chips on. We think leaders keep leading. Of course, there are going to be massive catch-up trades in the laggards in this space. First Majestic is one that I'm in for some sort of a mean reversion catch-up high beta move. But I'm also in AGI because leaders keep leading, and it's harder to go wrong. Higher probability of winning when you're in the strongest one. So AGI above 14, we like it to 21. Debbie Wasserman Schultz. She likes the precious metals. Oxy, guys, I don't know about energy. I think probably needs a little bit more time. This whole sector, they're not breaking down gasoline held. We came on here, we talked about how vulnerable gasoline and energy futures looked. They dug in. Warren Buffett came out again twice over the past few weeks, buying this weakness in Oxy. Continues to be the support at this level, just south of 60. If you love energy stocks and you have some sort of a long-term outlook for energy, this is probably a great place to buy. But for me, these charts are still too vulnerable, right? And we've played this game before where we're buying this level and our price targets are never getting hit. I wanted to cover it because these were two huge Form 4 filings over the past few weeks, the Buffett Oxy stuff. But again, opportunity cost in energy still. Hamilton Lane. We love these private equity firms, these asset managers, right? Within financials. I don't know if there's a stronger or better group right now. These stocks are trading like real estate companies or REITs, right? They have heavy real estate exposure. They have similar balance sheet issues that interest rates coming off 120 basis points over the past, 2 months now have really eased, right? In terms of those balance sheet issues, lower rates, green light. KKR, Carlyle Group, Blackstone, Hamilton Lane, HLNE. Sure. Probably the better place to buy this one was like 80 when the base broke out. Now we're already back at those old highs. I think you could buy strength, let it cool off, let it digest some of these gains. Massive leg higher off the October lows. Let it cool off, be patient with it, but strength above 116, target 153. I like this one a lot. And look at the insider buyer in this one. The vice chairman, Form 4, over $1 million. That's significant. Aspen Aerogels. I think it's building materials. Another super strong group. In fact, as good as this chart looks, this is probably a laggard within building materials because I think even at the index level, building materials are like back at new highs. They look just like home builders, right? So I think this is a catch-up trade within industry. And I really like that. ASPN, Form 4 filer a few months ago. For above 15, the base is complete. Next stop, 28. Dave and Buster's. I've never been. I've really never been. I would love to go. Never been to a Dave and Buster's. I don't know. Am I missing out?
Just for the record, I love Dave and Buster's.
I have a lot of friends who love Dave and Buster's. John Carlo just chimed in and said, I love Dave and Buster's. I'd love to hear that. Yeah. I'm soliciting feedback because I hear that. A lot of people have a blast there. I love video games, so I should probably go. If we're above 47, I love this stock too. 47 long, target 73, back at those old prior cycle highs from whatever it is, 2016, 2017. That is ticker symbol play. Chief marketing officer was an inside buyer earlier this year. And guess what, guys? It's that time of year. It is that time of year. H&R Block, just on time for the seasonal trend. You got to talk to your tax man. Maybe your tax man is H&R Block. For a lot of people, that's the case. Business has just blown up. Intuit is a similar play. Intuit, INTU, they own TurboTax. Always do great this time of year. And I'm talking about great from a fundamental standpoint, right? Of course. Very seasonal business. H&R Block back at those old highs. If we're above 48 and change, call it 49. Got to be long this one. Target is 61. Sunoco. I was just talking with Alfonso about this one. I grew up, there were Sunocos everywhere. They fell on hard times back around the financial crisis. I think came public again in like 2012, 2013, and then have been mostly sideways. So since this peak almost 10 years ago, monster base, 5.5% dividend yield. Energy stocks have been struggling, not this one. We call that relative strength. We call it the beach ball effect. If you're doing well while other, your peer group is not doing well, right? So oil and gas stocks haven't been great for a while now. This one's making new highs. If you're doing well, once that pressure comes off the industry group or, your market, right? And buyers show back up, what are the ones going to be doing that did well through the volatility or through the selling pressure? They're going to be doing even better, right? This is how we find leaders. So I just came on here and said, I don't love Oxy. I don't love energy. I'm skeptical. If energy turns right now, this is your vehicle. Sunoco looks better than any of them. And it'll pay you 5.5% to hang out and wait. You want to be patient and wait for that breakout. So I really like this one a lot. I don't know what they're doing differently, but above 60, got to be long. Sunoco, 50%. 50% get you back to 90, our first price target, and you collect 5.5% along the way. I like it a lot. You will have to deal with the K1 though. Disclaimer. This one comes with a K1. Manulife Financial Corp, MFC, monster base. Financial crisis highs, fell from 47 down to the single digits, right? Got absolutely blasted. And it's been basing for over 10 years. This level goes, call it 23 for confirmation. This goes 47, easy. That's a double. This is a huge company, a big company, Canadian based, I think Toronto based, insurance, asset management. Look at Canada. Not a fan of expressing bull theses at the index level. Right? So not a fan of buying EWC. What I am a fan of is buying the strongest companies in Canada. This is one of them. So MFC 23 to 47. If you're looking for a vehicle to express a bullish thesis on Canadian equities, look no further. I like that one a lot. Tempur Sealy International, they make beds. Ticker symbol TPX, above 50, got to be long. Look, I like the base here, right? Because we based, blasted higher, completed the reversal, and then we've really just been consolidating, right? All year, more than a year. Consolidating with an upward skew, right? Higher highs, slightly higher lows. Let's go. 50, 60, long target, 65. Sorry, guys. I don't have my glass on. I think it's 69 and change. PGT Innovations, PGTI. Richard Feintuch. 203,000, not nothing about a year ago. You got the base breakout, right? Base, go. First target hit. Weakness back towards 38 and change. This little gap to the target here. Maybe let that fill, buy that weakness, then go time back to 58. PGTI, that is a market leader. Guys, thank you for joining me. Thank you for being patient. Thank you for your support all year. I really love all of you for coming and viewing the show and interacting with me on a daily, weekly basis, whatever it is. So questions, comments, concerns, want to say hi, info@allstarcharts.com. As always, let me catch up on the chart a little bit, or the chat. We've caught up on the charts. Now I'm going to catch up on the chat. Okay. Blink. I like Blink. I was talking to a client about Blink. I was talking to Kenny about Blink. I think those are the right stocks for right now. These heavily shorted names. I think they're going to run these things this week. I love farmers markets. I don't know, Wavy. Was it enough small cap industrials? How'd I do? Hi, Mary. Happy New Year. Listen, Pfizer is one of those like dogs of the Dow. Wall Street's only free lunch, right? Shout out Jeff Hirsch. That's one of those names. Like, is it likely to see a bounce after the year it's had? I would hope so. It's not for me, but I wouldn't yell at you for buying Pfizer here. I think it's crazy what's happened to this. Here's what happened to Pfizer. They made a huge bet on the pandemic. They wanted to be the vaccine, industry leader forever. And they made the bet that people were going to get their COVID vaccine and then come back and get boosters like all year, every year, forever. That's the bet that Pfizer made. They were very wrong. And now, luckily for them, they're a large enough healthcare conglomerate that they have other revenue streams and other things that they were able to fall back on But that bet failed miserably. And now it's going to take some time to unwind that and, put their chips in other baskets. But that's what happened to Pfizer. The big COVID bet didn't pay off. Celsius, I don't, this poison water stuff, it's really not for me, but that chart has looked so good for so long. If things are thoughts on like this. Low volume. I don't. Again, I think I think I addressed the volume question. Dan, shoot me an email if not. Really like the video from Shivago Capital and the chart report. Yeah. I'll tell Pat. Josh, got you. Rachel, you're really the best. Breath thrusts. They're really real. Just talking to Walter Deemer. I'm trying to get Walter Deemer on the show because I want to talk about this breakaway momentum breath thrust from January. We'll see. Hopefully we can do that. Beautiful bullish breath thrust. Beautiful bullish breath thrust. Beautiful bullish breath thrust. That was 3 times. I'm not going to do 5. Yeah, and the inner market's so important, guys. Inner market's really important. Remember that. 4% in tens, 103 in dollars. We're below there. Let's go. Looking for risk assets to buy. Talked about Apple. All right, this was awesome, guys. I think we're just about done here. Chewy for the holidays. Yep. Alfonso is the best analyst. So there we go. Great stuff. 2024. Let's keep it going. Guys, I'm so excited for 2024. That is it for this week. Happy New Year, everybody. And I will see you again next week. Same time, same place, right here at 1 o'clock on Stock Market TV. Have a good one, everybody.